Technical analysis is a powerful tool in the arsenal of any modern trader. Traders use technical analysis to predict future market behavior and identify trading opportunities. But what exactly is technical analysis? Technical analysis is the study and interpretation of past price data to identify patterns and forecast future price movements. Technical analysis studies patterns in the form of price, volume, and time. With the help of charting tools, traders can easily identify these patterns and gain an edge in the markets. Technical analysis can be used as a standalone tool, or in tandem with other trading methods. For example, investors can factor in fundamentals such as economic indicators to complement their technical analysis. Technical analysis can also help to identify entry and exit points when trading, and can give traders an overview into the market sentiment. There are several different types of technical indicators available to traders. Some of the most popular include Relative Strength Index, RSI, moving averages, Bollinger Bands and MACD. Understanding the tools and how they work, as well as interpreting them correctly, is a key component to successful trading with technical analysis. Technical analysis can be a powerful tool for traders, helping to identify potential trading opportunities and forecast future market movements. Knowing when and how to use different technical indicators is paramount to success when using technical analysis. Combining technical analysis with fundamental analysis can also help increase the accuracy of your trading decisions. If you find this video helpful, leave a like, share, and subscribe to MT5Wave.com.